Okay, all right. We have a panel discussion. We have an absolutely young and eminent panel, and all of us are friends. We are going to discuss the future of the commodities market, which I guess will be of great interest to all the participants here. I want to make some preliminary remarks. Why are we discussing commodities? What is the importance of commodities to India? It has been one of my favorite topics over the last 5 or 6 years. Commodities as critical drivers of India's economic growth. I have believed, and I continue to believe, there are 7 major sectors of growth for India. 7 major growth sectors. Any part or any aspect of these 7 growth sectors will find its business booming over the next 15, 20, 25, 30 years. For the next 30 years, the 7 growth sectors of India include: first is food, second is textiles and clothing, the third sector is housing and infrastructure, the fourth growth sector is energy, fifth one is healthcare, sixth is education, and the seventh growth sector is leisure. Okay. The last 3, leisure, healthcare and education, are services. But the first 4, food, textiles and clothing, housing and infrastructure and energy. The first 4 growth sectors are extremely important for India simply because they have significant commodity implication. When you discuss food and agriculture, you've got to discuss agriculture commodities. How will you discuss or describe or go into the food sector without any knowledge of agriculture commodities? Therefore, food is a growth sector for India. There's no doubt at all. Simply because our economy is growing, purchasing power is rising, our population is increasing, the current per capita availability is low, and therefore every additional income will get converted into demand for food, more demand for food. For food is one major growth sector. The second one is, of course, textiles and clothing. And the third is housing and, of course, infrastructure. Very simply, it boils down to roti, kapda, makan, which we've been hearing for 30 years. This roti, kapda, makan is going to continue to grow over the next 25 to 30 years. And this roti, kapda, makan and urja, now energy, these 4 sectors have very, very strong commodity implication. So when you discuss agriculture commodities, when you discuss food, you got to know agriculture commodities. When you discuss textiles and clothing, you should know cotton, you should know synthetic fibers, you should know jute and other fibers. When you discuss housing and infrastructure, what you ought to know? You ought to know steel, you should know cement, you should know base metals, you should know aluminum and copper, nickel and zinc. All these are commodities. And when we discuss energy, and we are going to be seriously short of energy, India is moving towards a situation of energy insecurity. We've got to understand crude, we got to know about gas, we got to understand the coal market, we've got to understand biofuels. Therefore, energy sector is going to grow, housing and infrastructure sector is going to grow. At any given point of time today in India, we are 50 million dwelling houses short, 5 crore dwelling houses short. So there's going to be a boom in the housing sector. One of the panels, expert panels of the Government of India 4 years ago came up with an estimate that India needs to invest $1 trillion over a 10-year period, $1,000 billion over a 10-year period to have a decent level of infrastructure. And when you discuss infrastructure, it simply boils down to steel and cement mainly, and of course other base metals. So you can imagine if an economy is going to invest in $1 trillion in infrastructure, the implication of that for the commodity market. And therefore, commodities are going to be important. Commodities are already important. They're going to be a lot more important over the next 15, 20, 30 years. Commodities are going to drive India's economic growth because the top four, the big four growth sectors are food, textile, clothing, housing infrastructure, and of course energy. But that's the importance of commodities for our economy. Everything else will flow from these major growth sectors. And therefore, it's important for all of us to understand what commodities are, try and understand the nuances of the commodity markets, try and understand what are the drivers of the commodities market, and try and therefore make commodity markets not only a platform for risk management, but also for investment. And therefore, commodities are now becoming a new asset class. Commodities are attracting investment. Often commodities have brought much better returns than even equities. And therefore, commodities are becoming fashionable. Therefore, this is the importance of commodities for the marketplace. I have believed commodities and equity markets are not, they're not adversarial. They are not in conflict. In fact, there are synergies between these two markets. If you have knowledge about a particular commodity, you can take a trading view on that particular commodity. You can also go to the equity market and take appropriate views about the stocks. Let me give you an example of the synergies between commodity market and equities market. Take steel, for example. If through my research, I have come to a firm conclusion that steel prices are going to rise by 20% over the next 3 to 6 months, what will I do? I'll buy steel today. I'll go long on commodity steel, correct? That is what any investor will do. And if I have the knowledge that steel prices are going to rise, I'll go long on commodity steel. I will not be satisfied by being only a player in the commodity market. I'll go to the stock market. If steel prices were to rise, who's going to benefit? Steel producers will benefit. Therefore, I'll go long on steel producing companies. Maybe I'll go long on Tata Steel. So I had knowledge about commodity steel. I went long on commodity steel. I've gone long on steel producers' shares. I've done 2 transactions. I'll also do a 3rd transaction. You know what is that? If steel prices were to rise, it's going to hit steel consuming industries, correct? Let us assume, for example, hypothetically, Tata Motors are big users of steel.